Comprehensive Equity Research Analysis, Oklo Inc. Basic Overview Company. Name, Oklo Inc. Ticker, OKLO Country. United States Sector, Utilities Industry. Nuclear Energy, Advanced Fission Technology Market. Capitalization, $8.98 billion. Current share price, $60.95. 52-week range, $5.35, $73.553. Exchange, New York Stock Exchange. 2. Business model and operations. Core products, services, develops and operates Aurora powerhouses. Using liquid metal-cooled technology, commercializes nuclear fuel recycling to convert nuclear waste into usable fuel. Build-on-operate model, sells power via long-term contracts, not reactors. Revenue streams breakdown, source status details, power purchase agreements. Pre-revenue, future revenue from electricity, heat sales under long-term contracts. Fuel recycling development phase, monetization of nuclear waste conversion technology. Government partnerships, active site permits and R&D collaborations. Geographic revenue split, 100% domestic. No significant international revenue reported. Partnerships with South Korea's KHNP. Signal future global expansion potential. 3. Key financial metrics data as of Q1 2025. Metric value context, PE ratio negative, no earnings. PB ratio 34.15x high due to early stage valuation, focus on IP, tech versus assets. Dividend yields 0%, no dividends, reinvesting cash into growth. Debt to equity 0.67%, minimal debt. Equity funded model. Return on equity minus 56.03% reflects R&D investments and pre-revenue status. Current ratio high, $260.7 million cash versus minimal liabilities. 3-year revenue growth, NA pre-revenue. EPS 47 cents, improved from Q1 2025. 4. Balance sheet strength, cash reserves, $260.7 million. Total debt, minimal. Net debt position, net cash. Free cash flow, consistently negative due to R&D focus. Projected 2025 cash usage, $65 million. V. Management and shareholding. Key executives. CEO, Jake DeWitt. CFO, Craig Belmar. Shareholding structure. Institutional holdings, not disclosed in search results. Promoter holdings. Insufficient data. Likely high founder VC ownership, VI. Competitive analysis, main competitors. Company key differentiation. NuScale traditional light water SMRs, slower deployment timeline. Constellation Energy legacy nuclear operator, focuses on large-scale reactors. Close competitive moats. Proven technology. Fast reactor design based on 30 years of operational data. Fuel recycling. Unique ability to use nuclear waste, reducing supply chain risks. Regulatory head start. NRC approval for first-of-its-kind reactor. BOO model. Recurring revenue via power sales versus one-time reactor sales. 7. Valuation analysis. Current valuation. Market cap $8.98 billion. 3. VS pre-revenue status gives overvalued on traditional metrics. PB 34.15x versus sector median approximately 1.5x. Analyst sentiment, target prices $30, $58. Investing pro assessment, overvalued. Based on cash flow projections, verdict, overvalued near term. Long-term potential hinges on execution. 8. Growth prospects, near-term catalysts, 14 plus. HW pipeline. Letters of intent with data centers, defense sectors, first commercial deployment, Aurora powerhouse. KHNP partnership, supply chain acceleration for global SMR deployment. Industry tailwinds, AI energy demand. Data centers need 24/7 clean power. U.S. policy support. Executive orders to triple nuclear capacity by 2050. NRC reform. IX. Risks, key business stock risks. Risk category details, regulatory delays, NRC licensing complexity. State-level opposition possible. Cash burn, high R&D costs. $8 annual cash use may necessitate dilution. Technology execution, first-of-its-kind deployment, unproven at commercial scale. Competition, established players dominate policy access. Volatility, 598% one-year return, gives susceptibility to corrections X. Final summary and recommendation. Investment thesis. Oklo is a high-risk, high-potential play on the advanced nuclear energy transition. Its technology, moat, and policy tailwinds are compelling, but execution risks and valuation concerns are significant. Recommendation for long-term defensive investors. Hold upside catalysts. First mover in fast-fission tech. $14 plus GW pipeline AI data center partnerships. Key risks. Overvaluation. Cash burn. Regulatory dependencies. Entry point. $45. Share. Price target. $50 assuming on-time licensing progress. We're not building a demonstration plant. We're building a platform. CEO Jake DeWitt.